Hello? Hello? Is everybody there? Where is everyone? Oh, there you guys are. Sorry, that's a stupid joke. How are you guys doing? Hopefully everything is going well. Hopefully you guys had a good week in the markets. I know it's been a little bit of tough out there, the macroeconomic environment, but I figured it's been a while since I've done a solo stream. I wanted to do a Cash Flow Chronicles with Chris on Thursday. We couldn't make it work. I think he had to close on his house, his condo rather, in New York, so we weren't able to do that. So yeah, just coming here to hang out, answer some Q&As if people so well would like, and then obviously here on YouTube as well. Hopefully we can gather some folks, friends, and just chit chat. We are live. Yes, hopefully things continue to do well. Congrats to everybody that invested in Palantir. I have a bunch of Canadians that have always hated Palantir. So in your face Canadians that have always hated Palantir that got included into the S&P 500. So we'll be happy to see that going in hopefully by the end of September timeframe. And then they can't get away from it, because if they invest in the S&P 500, well, guess what, my guy? You're going to have to be supporting Palantir if you're going to be investing in the S&P. I am curious why my Robinhood's not working. I want to be looking at some stocks while I'm on here, and for some reason, let's see if Bitcoin shows up. Bitcoin shows up. I was just doing a live stream of Vince, and for some reason, ASTS wasn't working. Now it seems to be, so we should be good with that. A lot of people or not a lot of people, just some people asking about the portfolio, how it's doing. I just went through. So August was a pretty good month with respect to how we did in terms of options income. And just make sure I'm not going to accidentally exit out of this. We should be good. Not going to accidentally exit out. We should be good. Exit out. We should be good. Where is this? StreamYard. There we go. Portfolio is doing rather well, man. I can't complain with it. $22,000 in options income this month. That's about 2 to 3x more than what it normally is. Normally we're in the $6,000 to $8,000 range. It's the only, not only, we have only had one negative options income month so far. That was January of 2024. All of 2023 was also positive. Granted, there was only some months that I made $400, $500, but I'd say options income this year has been muy grande, muy importante, very good. Not 100% sure why. We did have a good December last year, $4,000. But last year, I don't know if I was only doing covered calls. That might have been it. I wasn't really doing so much of the cash secured puts, and I've started to get a little bit more on the cash secured put side. So maybe that has something to do with it. But yeah, the dividend income way down. I remember I was trying to always get, no matter what, monthly dividends out to $2,000 a month. I had always gotten $1,000. Since like 2021, 2022. I've always gotten $1,000 a month, but now that I've sold out of so many different companies and now I'm so much concentrated in the S&P, and then the other big bets that I have are non-dividend paying stocks except for Google. Yeah, August was not a good month. $255 in overall dividend income. So no bueno with respect to that. Last month was pretty good though. Let me just double check. What was it last month in June? So last month, we made about $1,900 in dividends, and then in June, made about $23. September should make about $2,300, but really only on forecast for like $18,000 in dividend income. That's a drop from last year. Last year was about 22, and the year before, which is when I started pivoting away from dividend-paying stocks, was 25, 26. So. And then 2021 I made 22. So 2021 I made 22. 2022 I made 26 about. And then 2023 reversed. That's when it started going back down to 22, 23. And then this year it's on pace for about 18. So, and that's strategic. I think a lot of people are probably like, that doesn't make sense. You always want your dividends to be going up. I think somewhere between now and 2025, 2026, you're going to hit a point where the portfolio continues to grow and the dividend income will start going back up again. I just sold out of Shell, so unfortunately, with that, the dividend income is going to decrease a little bit again. Some of that money has gone into the S&P. Some of that money is just paying off some other small things that I need to get rid of. There's a few things in the short term that I want to get rid of. So I have a 401k loan that I want to knock out. Some of that was to buy some of the real estate that I bought, 2 to 3 houses. I guess it's 3 houses since December 2022. And so there's that I want to knock out. So that's a couple $100 a paycheck that I just want to like nick, so that way I can get back to putting all that money back into the brokerage account. And then my car payment, that's always the thing. So once I knock those 2 things out, I should increase my cash flow by about another $1,000 a month. And with that, it's going to go directly into the brokerage account, which will be nice. So I started upping that a little bit more. So right now we have about what is it? Close to 1,500 going directly into the brokerage, and I think I'm going to start to try to up that close to 2,500 by the end of the year. Fingers crossed. And that's hopefully where we go. Have noticed a lot of folks dipping their toes into companies like Chevron and other oil companies. I would say there's probably another foot to drop, right? To me, I think that there's not a lot of upside right now. I think if anything, prices might increase 5 to 10%, but unless there's a step change in oil prices and demand, I think right now it's going to be pretty tough, or geopolitical, which is obviously something that could always happen. But I think right now, with where we're at, oil is tough. I made that prediction. I sold out of my Shell at $72. Here we are. I think, was it at 66 or $68? Let me see. Yeah, so it's at $67. So I'm not saying I'm some sort of oracle or anything like that. You can kind of see the writing on the wall. It feels like what I've felt before in the past and never took advantage of. So in the past, I've pretty much held on to a lot of my oil stocks when I felt like the market was going down. Granted, I do have some share-based compensation that unfortunately I can't exit out of, but it felt like oil at the moment, if you think about it, we have about 102 million barrels of demand a day, but the total capacity can make up to 106, 107. So, without OPEC curtailing the 5 million barrels that they are today, oil prices would be in the absolute tank. So luckily, luckily we do have people like OPEC, but that's not to say that other companies and countries aren't increasing production. And unfortunately, that puts a strain on the entire supply side, because demand is just not keeping up with how fast the supply is growing. So I think between now and December, you're going to be in this kind of no man's land. And then even in December, if OPEC doesn't continue to push that 2 million barrel a day voluntary cut, well, you're going to continue to put prices down more so into the floor. So, I think there's a lot going on, potential for demand to kind of fall off over the coming months, just because it's the end of summer. How cold does it get? What kind of demand do we see in the wintertime? Somebody also mentioned, they said, Matt, you didn't mention EVs. That's part of it as well. But I just feel like right now, EVs is a part of it, right? Don't get me wrong. But when you're talking about a swing within 12 months, EVs aren't going to impact your oil demand by, let's just say, 5 million barrels, right? That's mostly OPEC, right? So I'm not saying EVs aren't a part of that demand weakening, but I think that at the moment it's really more so about the oversupply of oil and gas right now, rather than the demand growth and the fact that you have an undersupply, right? So there's that piece. So to answer the question, I don't think oil will find a floor here. I think we'll go to the low 60s, and depending on how things go, we might end up seeing in the 50s. Do I wish I bought more Palantir? Absolutely. I just got done a podcast with Vince's Bullish. We were talking about Rocket Lab Weekly. We've done 50 episodes or so, or 49 episodes or so. So a little bit shy of 2 episodes. But congrats everybody again to those that invested in Palantir, that believed in the company. I have firsthand knowledge and work with the company at UDOC, Undisclosed Oil Company, which is a a cover name for the company I actually work for. If you're interested, find me on LinkedIn. But Palantir has been a company that I've worked with, since before they even direct listed. Some people are like, oh, well, they're still down from all-time highs in 2021. It's like, yeah, but that was meme crazy. Everything in 2021 was absolutely insane. But bought in direct listing day at $10 a share. I was fortunate to get, 1,000 shares for 10 grand. And, over that time, I loaded up and my cost base is about $13. I have 4,500 shares. Do I wish I had more? Absolutely. I think my biggest problem is even throughout 2022, 2023, when my portfolio was normalizing, back to the 7-figure mark after, losing that sort of status in 2022 because the pullbacks that we saw across the entirety of the market. I never continued to, on a monthly basis, buy more. I at one point said I wanted to get close to 10,000 shares, and unfortunately, I'm sitting at a little bit less than half of that. So um, there's that, and it's unfortunate. Let's just see. So let's just go through Ethos. What's going on, my guy? BNI bro, what's going down? Can we get a portfolio update? I'll talk about anything, man. I just don't share the numbers in the portfolio. It's literally just not advantageous for me, right? I have a lot of, at this point, so much more to lose than when I was only $100,000, $200,000 portfolio. So it just doesn't make sense for me to share. If you guys are interested, I'll tell you what kind of companies and stuff like that. But I'm not just going to openly share, what companies they are and everything they like. But I'll answer whatever questions you have. CG, what's going on? Top secret. Rocket Lab is going to zero. It's the worst company of all time. Mike K, what are we doing? How are things? Yes, we are live. What do I think of Spy Eye? I don't really have an opinion, man. Let me see what it's all about. Who is it? Enios. I don't even know who Enios is. So, tax efficient, monthly, high income, actively investing. I'm gonna say no. Not a fan. Because since 2022, October 2022, the stock is like flat. So unless it's giving you like $100 a month dividend, it doesn't even, what kind of yield is it even giving? Unless it's giving you some crazy absurd dividend, my guy, I would stay 10 feet away from this. Yeah. I would a call spread. Yeah. I would stay away from Spy Eye personally. Not looking too hot. I think you'd be so much bigger on YouTube. Is that a fat joke? No, I'm just kidding. I agree, man. I unfortunately just don't necessarily think that, even with the persistence, I do a lot of stuff on other people's podcasts. I just went over 10K subscribers or followers or whatever on X. So actually, I don't necessarily know how much I post on X for you guys or how many of you guys follow me, but that would be dope. I would love to get, 11, 12K, even more on that. So it's a lot of fun. Gotten a lot of fun folks following me. I have a lot of fun on there. I'm a lot more active on X. It's probably easier just to be able to do that than to come on YouTube. And to be honest, with it used to be that I shared the portfolio verbatim, right? Literally went line item through line item, who paid dividends, who didn't. And I'm still okay kind of doing that piece, but it just doesn't make sense. And I've gotten some information, some what do I say? Some advice from other folks that are a little bit further along in their journey. They're like, dude, why do you do that? That just opens up so much risk. And I'm like, you're right, man. Like, it's not worth it as much as I would love. And also, I just don't make a lot of money. Like, I'm lucky if I get paid $100 a month from YouTube from a lot of the old greenfield sort of videos I've made about fidelity and how to use it. Um, and to be frank, like, there's other things out there right now, like writing articles on seeking alpha, yields more of a return for me than YouTube videos. So unless it's a point and shoot, I like doing the live stream piece. I love communicating. I love connecting with like Amit, Vince, Chris, obviously. That's a lot of fun. And for those of you who don't know what I'm talking about with Chris or Amit or anything like that, we did start a new streaming channel over on Cashflow Chronicles TV. So let me post that channel for any of you guys that are actually curious about following that. We try to post twice a week over there, and it's a piece, and it's nice. We have a public portfolio about $4,000. We're trying to grow that to $100,000 in the short term, where we have people kind of feeding into it, saying what they think. We share that verbatim, what exactly is there. We take screenshots, share it, so people know, on a regular basis what we're investing in. But for a while, I thought I wanted to do a little bit more on YouTube, and I would love to grow a streaming. I do like the streaming piece. I think it's a lot easier for me to kind of speak off the cuff than speak to a topic. And I like to jump around from topic to topic as well. So having that that skill and ability is a lot of fun. But I just also think there's a lot of really good charismatic folks out there that do a phenomenal job. Like Amit does a really good job. So you're competing against people like that do a really good job. And unfortunately, I'm not as charismatic and con manny as some people. Like, some people will straight up just tell you this is the best stock of all time and be able to like spit off a bunch of different facts and speculate. And I just don't like to speculate. I like to talk a little bit more about the facts, what I know, and move on to the next topic. And also, I don't cover a lot of different stocks. I cover Palantir, Rocket Lab, Dutch Bros, and I kind of stay in my wheelhouse, and with that, it's kind of tough to be able to. And I also don't like to do things for clicks. Like, I don't make Tesla videos just to get clicks. I don't make Palantir videos just to get clicks. Like, I do things because I want to, not because. So unfortunately, that might lead to me not necessarily growing as fast as I might like on YouTube, but it's also not really a priority of mine. So, but I'll try to do more. I should probably try to do one stream on my personal channel a week. I should try to aim to do that more. Don't think oil finds. I saw that earlier, so that's why I kind of went on that little oil monologue. Real estate mogul, yeah, man, it's gonna be a lot of fun when we refinance these houses. I was just doing some research. My personal house, I've actually thought about contemplating changing it up to a 15-year. Literally, that's how easy. I've paid off a lot, obviously, because it's a high interest rate. So it makes sense sometimes to just like double pay the mortgage a little bit. But then also, interest rates have come down so much that with that equity pay down, or equity build rather, in the home, coupled with the favorable interest rates, are more favorable than what they were. A 15 years almost equivalent. And it's actually kind of insane. And it actually would be slightly cheaper if I get rid of the private mortgage insurance for my personal house, the house that I'm streaming from right now. So we'll see. We'll see what ends up happening with that. I might just stick with the 30-year just because I eventually plan on renting this out and then opening up a HELOC. And that HELOC will be kind of like an ATM that I can use to go potentially buy other houses. Eric, what's going on, man? Much appreciated you continuing to follow along. It's a lot of fun continuing to do YouTube and interacting with people, especially learning how their portfolios mature and stuff over the years. So thank you for continuing to follow. Oh man, the interest rates on all the loans are garbage. The one we just got in May for the one Airbnb, which is absolutely destroying it. Like literally destroying it. I'm like, we have to open up a Schwab and just like put this money in a money market because there's just so much cash. And we have people already reserving for next year in the summer, like in order to sitting on that cash. Like it's just so much fun. We're having a great time with that one. My sister's done a phenomenal job. I went 50-50 with her and my brother-in-law on that one. That's at 7 3/4. Yes. 7 3/4. The house I'm in, 7.3. The first rental that we got in December 2022, that's at 7. But you have to think, the rentals, my personal house has sucked because it was just timing, but I'm hoping to get it down to 5.5. So almost a 2 percentage point cut. And I'd be happy with that because that would trim off $500-600 a month and get this to a more lower break even for rentals. So that would make it almost perfect. And I might pay slightly more out of pocket. Like I might put 20 or 30 grand into this house just to get the break even lower. So eventually if I did, but maybe I wouldn't, maybe I would just keep that 20-30 grand so I could invest it in a house that I eventually want to move into. Because it's a nice house. Don't get me wrong. Like this house is great. It's just, it's not a forever home, right? There's a couple other things I would want for a house to be more of a forever home, but it's a great starter home. Do you guys see that light flickering, or is that just me? Or am I having a seizure? This house is great. 3-bed, 2.5 bath. If anybody's in Houston wants to rent out a house, I got it for you, my guy. So yeah, this house is 7.375. I'd like to get it down to 5.5, maybe 5 flat. That's kind of the hope. And then same thing with the rental properties. I'd love to get the first house down to 5.5, which means that it'd probably have to get interest rates down to 5, because obviously if they're going to charge us 0.5 percentage point because it's a rental rather than a personal home. So we still have a little bit of ways to go on that. It would be phenomenal if I'd be able to get something in the 4s, but I just don't foresee that happening. So yeah, unfortunately, all of them are in the 7s right now. So pretty tough. But they cash flow. Even the rentals, they cash flow. The Airbnbs, they do a good job. This house, if I were to rent it out, it would not cash flow right now with the rents. I only put down 10%. So I think by the time I move out, it'll probably cash flow. Rents will come back a little bit. And then also the refinance will definitely help with that. So hi from Scotland. What's going on? Dave Walsh, much appreciated that. Do I wish I bought more? 100%. I think I stated that. I wish I bought more. Yeah, just put simply. Do you have 2X accounts? I do not have 2X accounts. It's just at Real Matt Moneyman. Let me just put it. This is my X. So anything other than that, unfortunately, I know, like even on Instagram, I have like 1,000 people that follow me, and a lot of them are like personal friends and people that I've met through traveling and stuff like that. And I even have impersonators on there. So it is what it is. Do you own NVIDIA? If not, why not? Do you think it's attractive at these levels? I think NVIDIA still has a little bit to run. Steve Fiorillo, I don't know if you guys follow me. I would love for you guys to take the opportunity. Somebody, if you guys look up to me and you like what I bring to the table, somebody that is really wise and writes really well. The thing is, he covers a lot of stocks, and some of them he invests in, some of them he doesn't. So just be cautious of that. He may or may not, actually own the stock that he's writing about. So just be cautious, like that. You're not just investing blankly into a stock just because he's writing about it on Seeking Alpha. But I posted his Seeking Alpha on the chat there, and I would really appreciate if you guys took the opportunity to do that and follow him. Thomas, thank you for still being a member, my guy. That really means a lot. And same with Adam. I really appreciate you guys continuing to be members of the channel. I know I don't really do any. If I had a lot more members, I would probably do like private streams and individual chats and stuff like that. But there it is. Hello from Greece. Wow. That's really cool. Thanks for visiting, my man. Hopefully you can I don't know if you know Dave G from the Space Dock stuff, but he's over there in Greece honeymooning. So congrats out to them. And um, yeah, much appreciated, Greece. It's to get international people in here, man, is absolutely phenomenal. And like I think 30 to 40% of the people that watch the shows on Map Money are international, and I can't tell you what that means to me. I'm sure, unfortunately, there are a bunch of Canucks, but there are some folks from Europe and Asia and Australia that visit as well, and I just can't tell you what that means to me. It's very humbling. How do you feel about the future of natural gas? I think short term it's going to continue to be tough, but I know a lot of different streams of LNG that are coming online in the latter half of the decade, and with that, I think you're going to see a lot of exporting. And what I yet to see is LNG really become a global commodity as of yet. And why does that matter? So, oil, generally speaking, oil prices with good infrastructure and access to markets all trade within like a $10 a barrel sort of range. So they're all like 15% within each other. But to give you this context, actually, this is probably something I can share with you guys via screen. Is this. So it's going to be tough. So hopefully I can do this and give it justice. Let me zoom in here a little bit. So this is where I live. Like every day I come on here and I look. So you can see WTI at 67. When I kind of made my prediction that oil is dropping, I made it in like the 72, 73. Brent crude was still kind of like in the high 70s. Now it's down to 71. I anticipate this is going to continue to struggle unless something changes. You have something called natural gas Henry Hub, right? Which is that $2-ish range. Where's the Henry Hub? Yeah, so $2.25 basically. And this at times in the past has gotten all the way up to like $13 back in like 2008 time frame, $8-9 back in the 2008 time frame. But because of how much gas we found and the shale revolution, hydraulic fracturing, drilling horizontal and everything the like, we just have way more gas than what we knew what to do with. And we were actually going to import LNG from Russia and Qatar and all these places. But luckily we found so much. So we actually turned a lot of those LNG facilities into export facilities. But in Europe, they still get a lot of natural gas from from Azerbaijan and Turkey and all that. But this Dutch TTF, if you look back, this is what went crazy back in 2021, 2022 when the Nord Stream pipeline was bombed. And why is this ad still here? Just go away. So you can see that natural gas prices are still pretty hefty, $12.65 in Dutch TTF, which is kind of a major marker for Europe. And then you also can see that Japan does a really good job as well. So this obviously went really haywire as well when people stopped buying from Russia back then. But you can see that natural gas prices, even for Japan, are at $14 an MCF, and they bottomed out, at $8 or so right after winter. And you can see people are probably buying here for winter, and generally it peaks out in like the October, November time. But the reason why this is important is if you take that margin, right, that $2.50 margin, add a little bit for transportation costs, etc., and you take $12, $14, I think that globally there's a huge demand for American natural gas, but unfortunately we just aren't able to export enough for it to be worthwhile. Eventually, I anticipate for natural gas it to kind of even out. And what do I mean by that is you're going to have enough LNG supply coming out of the United States, because we're going to bring on a lot of LNG facilities where that price isn't going to be as prolific in Japan unless you have some more shortages or something like that. But I anticipate the natural gas price will probably settle around $6 to $8 in the long term, meaning like the next 5 years. And a lot of that has to do with, do they have sufficient LNG terminals? So you have LNG terminals coming on in the UAE. Qatar is continuing to bring online. Even Canada's exploring LNG facilities, LNG facilities on the Gulf Coast of the U.S. So lots of LNG going around worldwide. So I think right now that's how the markets for LNG are kind of looking out. In the US, it's going to continue to be constrained, I'd say, until like the latter half of 26, early 27, when a lot of these new facilities come online. Right now, there was like an overbuild of LNG facilities in, let's just say, the next upcoming. Sorry, there was an underbuild probably over the last 10 years because oil prices were pretty tough, and so it's hard for people to get funding. And so right now, you kind of had a lull, and it takes a while for these things to come online. So a lot of facilities have been sanctioned kind of in the late 2018, 2019, 2020 timeframe. So they should be coming online in 5-10 years after that. So hopefully in the latter half of the decade, you have some of that. But after that, there's a large shortage of LNG facilities because of permitting, and it's just not making a lot of sense right now. Building costs have gone up to build those facilities, and so I anticipate the latter half of the decade you're going to start seeing U.S. gas prices start to go up pretty significantly. And when I say gas, we're talking about like in its gaseous form. We're not talking about what you put in your car, right? That's petroleum, that's gasoline, so it's different. But yeah, hopefully you guys can understand. What's my exit strategy for a stock with an example? It depends, right now, Nvidia for me is like 124, 125 bucks. I wouldn't mind getting out at pretty much where I bought it. And the reason being is because I bought at 124. I've wrote some covered calls now. And so I'll probably continue to write covered calls at about a little bit above my cost basis. My hope is that I kind of get back to where it was. I was originally kind of hoping for a big pop after earnings. That didn't happen, but there's that. It really depends stock by stock, right? Like NVIDIA is a bad one, an example, because I don't really plan on holding it for a super long time. But then you have companies like Rocket Lab and Palantir, which I honestly don't. I have like short term. If it were to hit X and you bring so many years of growth forward, I would potentially sell. Like, for example, if Palantir were to go to $100 today, I would probably sell it, right? Because that's literally 5-10 years worth of growth happening immediately in terms of the valuation of the stock price. And same thing with Rocket Lab. If Rocket Lab were to go to like, I don't know, $30 today or something like that, it wouldn't make sense. But if it were to go to like $10, I wouldn't sell it because I anticipate by the end of next year it'll be trading at 15. So it's kind of just about knowing where you think the stock is going to end up long term. Like Palantir, I always knew it was going to be $100 billion company, but I was always kind of scratching my head thinking, would it get to 250 to 500? And I had a lot of conviction that it would, but now I'm sitting here wondering, well, what's going to stop it from getting to a 500 billion to $1 trillion company, right? And kind of acknowledging that. And I also kind of think about when I buy a stock, am I going to write covered calls on it? If I write covered calls, hopefully I'm generating a little bit of income. But I buy companies that, generally speaking, except for the like Nvidia trade right now, that I really don't plan on selling for the next 5 years unless something drastically changes with the fundamentals of the company. So generally now I'll look for companies that I know are continuing to grow at double-digit sort of paces, like 10 to 20% per annum. And then for more speculative companies like Rocket Lab, Palantir, Dutch Bros, etc., I'm looking for companies. Palantir is now sort of getting to that place where it's not speculative anymore. And by say it's kind of, I mean, it's not speculative anymore. It's kind of moving on to like the hold and wait sort of companies like Google and Amazon for me, and just add whenever you can. But companies like Dutch Bros and Rocket Lab, even though Dutch Bros is decently positive, it has its hair because they're currently outspending in capex compared to how much they're earning in net income. And so to me, that means like you're kind of running the company at a deficit for future growth. So you kind of have to keep an eye on it. Like you're obviously overspending in the short term. Is it actually resulting in top line growth, bottom line growth? Eventually, at what point are you going to break even in terms of cash flow? Um, so there's that piece. But Rocket Lab, for example, is another one of those where it's outspending, but it's also not profitable. So it's getting closer and closer every quarter, but they're outspending because of their medium launch vehicles. So you kind of have to think a little bit about each company, right? Everything's going to be different. And if that's the case, like I think that that's a part of it. I think so many people are so into like, well, how do you know? And this is like, there's no one size fits all. There's so many different strategies, and you kind of have to think about it in that respect. So for me, I would say the thing that you have to recognize most is, do you actually want to watch it or do you not? Right? To me, I'd say most people should be investing in the S&P, and I've actually figured that out for myself as well. I used to think I was an oracle or something like that when I first started getting money, and it was fun, and it still is, but you have to recognize where your strengths and weaknesses are. I'd probably say I still invest in too many that I can't keep my eye on, but I just have an infatuation with investing in stocks, and so that's unfortunate enough. But um, the thing that I would advise people, I can't advise, but guide people rather, is S&P 500, man. Like just put as much as you can, save. It's more about how much you save on a monthly basis and putting it away and not losing it. And I think a lot of people, unfortunately, just frivolously spend money for no reason at all. And they save $500, they invest it, they think that $500 is magically going to grow to like 10 million. And I'm just here to tell you, and hopefully smack you across the face. And I think this is another reason why a lot of people don't end up subscribing to the channel. It's going like, you can't do it. Other channels will lie to you straight to the face. They'll be like, oh, $500, you could turn into a trillionaire. And it's like, dude, you don't have like $50 to rub together. Like you're literally on here, like clapping your hands, trying to act like a fucking entertainer and like hype people up when you don't even have two nickels to rub together. And unfortunately, that's just the reality of most people on YouTube. And some of them do a really good job. Like some of them have $50,000, $100,000 portfolios. And I'd say they do a phenomenal job. But I think the thing that people don't know is what they don't know. And like, you might be like, what do you mean? You don't know what you don't know, right? Like there's realms of what knowledge you have. And I've fallen victim to this as well. Like I used to think dividend investing was the be all end all. And so I would do anything and I'd be like, oh, I don't care. I'm underperforming the market. I'm dividend investing. And all that matters is coming in from income. And then I realized when I got closer to the 7-figure mark, I was like, what the fuck am I going to do with $30,000 a year in dividends? Like I just spat it out at the beginning of the stream. In 2021, I made like 22 grand in dividends. 2022 was 26,000. 2023 was 22 again. And I'm back down. I'm like, to me, it's more about, I'll be lucky to make 18 grand in dividends this year. To me, it's more about the growth and getting closer to $10 million and then focusing on getting a dividend portfolio when I've like made enough money where I could literally not have to worry about money again versus like, okay, what am I going to try to do? Continue to grind to $100,000 a year in dividend income? It's like, that's great. But like, I'm hyper focusing on investing in companies that are yielding 5-6% that are eventually going to cut the dividend in the long term. Like, that's not the way I want to live. So, I kind of took that step and I was just like, look, I'm not going to retire. I did think about retiring in 2021, moving to Asia and like saying full-time YouTube and, make money that way and call it a day. And, come back to the workforce and I'm kind of glad I didn't. I'm in a great place right now at UDOC, senior engineer, doing really well with that and having a lot of fun with it. Seeing a lot of cool stuff, seeing a lot of cool projects go through and having a lot of fun with that. So, maybe in 5-10 years, that'll put me at 43. Maybe it's a different story. Maybe I'm doing something like YouTube full time where I could pivot off of that. Maybe Rocket Lab prints money and I'm like, you know what? It's time to move back to Pennsylvania with my family, do real estate, have fun with that, spend more time with my nieces, nephews, maybe have a kid or two of my own, all that. But for the time being, you kind of just have to look at what's right for you. And I think Exit strategy is probably one of the things that I think about last. Generally, when I enter a stock, which is when you should be thinking about the exit strategy as well, but generally, when I enter a stock position, I think about five things, which is objective, time horizon, risk tolerance, how active or passive I'm going to be within the investment, and how much capital I'm adding to it, right? So if it's just going to be, ooh, this is cool, I'm only going to add the $500, it's probably not even worthwhile to be in the portfolio at all, because what's $500 to a seven-figure portfolio, right? It's pretty small. So in that respect, I try to keep that in check. $500 to some people might be a lot of money, so I'm not trying to build, but you kind of have to see what works for you, and um, you have to think, like, is that the only $500 you're going to add to that? Um, and what do you expect out of the portfolio? Maybe you only have $1,000 and you're not ever going to have another $1,000 coming into the market, right? You're living paycheck to paycheck. There's nothing you can do to get yourself above water. You're really struggling, and that $1,000, the only $1,000 you have come across, and you want it to really get you out. You're going to invest completely differently than if you are adding $1,000 to the portfolio every month, right? So to get to that $1 million, if you're adding $1,000 to portfolio every month, you can invest in something a lot less risky, slightly potentially lower risk, lower returns, but eventually you'll still get to that $1 million. But if you're investing in this $1,000 is the only $1,000 you'll ever have, and you don't have that additional $1,000 that you can add up to it, you need to find a way to 1,000x your money, right? You need to find a way to add 3 zeros to that and not lose it. And that's tough. That's a tough ask. You're asking your money to do two completely different things. If you're adding $1,000 a month, you're saying, I need you to work. I don't need you to work that hard, right? Because I got another employee coming right next week, right? Or next month. And then the same thing with, it's like, look, now there's two employees, right? Think of $1,000 as an employee. Look, you guys are working hard. We need you to get to $1 million, but we have a third employee coming next week, right? The only thing you need to make sure is you don't lose that employee. You don't lose that $1,000 that you added, and that you keep adding, and you slowly have them work, right? Versus, like, if you only have $1,000, you only have one employee, and you're trying to make them the next SpaceX, it's going to be tough, right? It's possible, but how many SpaceXs are out there? Not a lot. So you really got to think where you are in that spectrum, and that's hopefully two places you can kind of look. And I think saving is the most important piece. I see a lot of people that just add that first $1,000. Like, I did it, mom. Like, we're on our way to $1 billion, and it's like, you added $1,000. You could add a little bit more. So hopefully that helps. Xmar, don't know anything about that. Sven, thanks for joining. Andrew, much appreciated, my guy. Hopefully you're doing well. Thomas, once again, thanks for being a member. Honestly, yeah, solo streams, I like them, man. I can ramble along and not get interrupted. I get interrupted a lot. I think markets are going to August 5th lows at least, which all the data in the last 2 months has been looking pretty rough. And now Kramer talking recession now on our show. So if Kramer's talking about recession, man, go full port. This thing's going to the moon. No, I'm just kidding. I'm sure you guys have seen the inverse ETFs, right? They're a lot of fun to think about with Kramer. But yeah, I think he honestly does a good job. But I think a lot of times people mistake him. Yeah, sometimes this is completely wrong, but he thinks about things in like a couple month timeline, right? And a lot of times when people that are kind of retail investors, they're generally looking for the next 12 to 24 months, but also they don't check on their portfolios as regularly. There's the maniacs like us, like I'm sure like the 40, 50 out of the 62 of you are a lot like me, and you're maniacs, and you look at your portfolio religiously every day, and you're upset when it goes down $100, even though you have $100,000 portfolio. I get it, my guy. I've been there. But at the same time, what was it to say? Yeah, I mean, Kramer looks at things like a hedge fund manager would, right? What's it making? And he does a lot more trading, Let's see. Red Hill Ranch, 4K to 100. Not sure what that means, but yes, I'm just going to agree. Ben, my guy, I saw you ask this the other night. I don't know if it was last night on the Palantir stream or a different stream, but I've did a lot of videos on X. I've done a lot. Have posted the same video, I believe, on my YouTube. Let me double check. It's a 7-minute monologue from Cashflow Chronicles on September 3rd. So if you guys are interested in seeing that directly, what do I mean by oil's going to zero? It's not. It's going to $50, I assume, 50 to 55. Take an opportunity to look on the channel and on my channel specifically, not Cashflow Chronicles. You can watch the Cashflow Chronicles one, but I literally have the monologue cut 7 minutes as to why I think oil is going to be challenged over the next 12 months. And, and I think that's going to be the case unless there's geopolitical reasons or further deep cuts, which I don't think they can be done right now. I think there's too many cuts going on in the Middle East that OPEC, nobody else wants to cut any further. So there's that. It's great with Chris. I like Mr. Patel. Mr. Patel's good. Mr. Patel is good. Just do what you like to do. I appreciate that. I try, for a while, engineering was getting a little tough, a little redundant, but I'm in a job right now a position right now that I really, really like. So Amit isn't a comment. No, Amit does a good job. So I'm not talking about Amit. Amit does a really good job. He works really tough. So hopefully that wasn't perceived. I'm never talking poorly about Amit. I admire his veracity. Veracity. I'm not good with English, guys. I'm good with numbers. And he does a phenomenal job and he works extremely hard. So I'm never talking about Amit. And Amit also, he does speculate a lot. And he does speak on things that are a lot of speculation. And I don't always agree with him. And I let him know that. And hopefully he doesn't take that to heart. Like certain things I'll be like, no, like I disagree. I love him and I think he's doing a phenomenal job and he's grown so massively over the past 2 years, not even just as a content creator, but with his knowledge. My fear is though, is he's very risk on. And so for those people that listen, I could be risk on as well. Right. So, just be cautious. Sometimes I'm pretty risk on. Amit still, I don't think necessarily knows where that line for risk tolerance might be. So while he does a phenomenal job, I don't think he says he's been burned, but I don't think he's been burned to the point where he's like almost liquidated the account, burned. And sometimes you need that to truly be humbled. But not to say that it needs to happen, but I think he's still trying to find that line as to where risk tolerance really is. And so sometimes he promotes certain things or suggest certain things that are very risky. And it seems like, this is, normal. It's like, no, that's pretty tough, right? You should be more advanced before you do something like that. Not saying Amit isn't advanced, by the way. I think he should learn those things. He should be investing in those things to help him learn where his risk is, because I think he's going to be in this for the long haul. But the average investor who has only bought like $500 worth of stocks now starting to do X and doesn't have the experience can get burned and then be turned away from the stock market for life, which to them could have been a phenomenal wealth generating tool. And that's my only fear. So that is what it is. What is going on? Buying more Palantir Monday. Oh, you're just saying what's going on. What's going on, my guy? I agree. Palantir Monday. I think in 20 years, man, you're going to be like shit. And that's the problem that I always see. I was actually going to buy more last week in the $29, $30 range, but unfortunately here we are. So I might just try to do some cash secured puts, buy, a couple hundred shares, couple contracts a piece. That'd be worthwhile. Midwest, what's going on, my guy? Much appreciated the continued sharing of the channel and support on the channel. Adam, you do what you do really well. I appreciate that. I should do that. I do appreciate that. Should we buy L'Oreal? I don't know. Buy more Palantir or wait. I guess it depends how much Palantir you already have. Hold on a sec. I ordered a Walmart order because I was too lazy to leave the house and I had a bunch of live streams and other work to do. Let's see. Unavailable. Oh, okay, that's fine. When unavailable. Okay, well that's fine. I was ordering store brand mustard for 98 cents, but unfortunately, I'm getting French's for $1.78. Oh well. It really depends, man. I think you're going to get an opportunity to buy Palantir in the high to low 20s, especially if this market that we're kind of seeing in a macroeconomic trend that we're seeing persists. But that being said, nothing's guaranteed, and I think you already have some Palantir, but it depends on really what your long-term portfolio looks like. That PMI sucks. I'm almost all out of it. Yeah, PMI sucks, but it's a useful tool. I think a lot of people are like, "Oh, PMI, F that, bro. Get to save 20%." It's like, all right, my guy. Like, so you're just gonna run another 4 years, and it's like not, get any. And it's not necessarily about the equity build, right? But it's about the appreciation. The appreciation, for example, if we had waited to another year or two on the one house. So we bought a house in 2022. Luckily, for some reason, nobody was buying houses in December 2022 in this area and the beach. And we got a decent deal. It's not a barn burner of a deal. It wasn't like the best deal of the century, but it's a good deal. It's appreciated $100,000. We put down 10%. We're paying PMI. We classified it as a second home. We go down regular enough that it's a second home. Especially my buddy, he goes regular enough. Sometimes once a month or so. So technically it's a second home because he goes there enough. And at the same time, we pay PMI. But you think about it, it's like, had we waited, we went out and bought that house. We'd had to wait. But it's appreciated $100,000. So and if you think about it from a cash on cash perspective, I think we put down 50 or so grand. The cash on cash return on that house, if you include that appreciation, which I wouldn't, but the cash on cash return on that house has been pretty good. And then the total appreciation, the total return on their down payment has been absolutely phenomenal. We've probably in that case doubled our money in the 2 years that we've had it, almost 2 years that we've had it, 18 months that we've had it. And we're continuing to get cash flow every month. We're sitting on 20 grand in the bank account. We have a pretty active October, November. So that 20 grand is going to last us into November probably. And then we'll slowly have the bleed until next year when it starts to get really nice again. But, now we have this great producing asset. And when we refinance, we only put down 10%, remember? When we refinance, we're probably going to be at a loan to value ratio of 70 or 75%. So we went from a loan to value ratio of 90% to now down to 25, potentially, down to 75 or 70% because of the appreciation in that area. And we've gotten cash flow in the meantime. So we've also reinvested back into the property in the meantime. And we also know the market price, and we know what things we need to do to improve the daily rental value. And we've done some painting. We're going to do some painting this summer. So it's a better house. The market value of it's a lot better than when we bought it. So, the same thing cannot be said about this house, but the house that we bought in May is a cash flow monster. We bought that in May. We didn't even have a full rental season for it. And we're still sitting on 20 grand, actually probably closer to 30 grand after this week. But I'm trying to account for like future mortgage payments, but we have 20 grand sitting in a checking account. A money market account. And I think we have like 7 or 8 grand sitting in our checking account. So, I mean, these things are tossing off some serious cash, and then you put it in a money market account earning 4 to 5% interest. I mean, it's a couple $100 a year, but that works. And so you do that a couple times, a couple years in a row, refinance the properties, then the cash flow ends up being 6 or 7 grand better a year. I mean, these things are sometimes it's about buying the houses at the right time, making it work. I mean, the returns weren't barn burners, and we've been fortunate. We've gotten some really good investments too, but um, really good returns. I mean, but they're not barn burner returns. But once we refinance these things, oh my god, the cash on cash. Like you think about it, um, we put down I think like 54 grand or something like that. So just the refinance alone on the first house, refinance alone on that house, we're hoping to get $6,000 additional a year. Just the refinance on that, right? It's going to save us 6 grand of cash flow a year, direct to our bottom line. We put down 54. So just the refinance on that will be a 10% increase cash on cash per annum. So it goes to show you, like sometimes you gotta marry the house and date the rate sometimes, as they say. Yo, have loved your Chris content. Appreciate that, my guy. JP, I've seen you around a lot over the past several years. Appreciate you continuing to support the channel. Oil is down because demand from China is very low. Watch Bloomberg TV at 10 o'clock every night, and China is still in bad shape in other countries also. Yes, and you're also neglecting the fact that OPEC is sitting on a 5 million barrel a day curtailment. 3 million being mandatory, and 2 million being, it's actually closer to 5.6 million. But if they just flooded the market and didn't do any curtailing, then oil prices would be 20, $30 right now, guaranteed. Maybe less. I'm having a seizure. Yeah, I still see it. It's flickering. I don't understand what's going on. Where can we find your specific Airbnbs? Not addresses, but could you share links? I'm all right on that. You know, I did that one time. I made that mistake. And you can take those pictures, and then you can find the Zillow links through like the backtracking. And I just don't want people knowing where my houses are. No offense to you guys. It is flickering. Okay. So no Caesar. So fuck you. No, I'm just kidding. So yeah, I mean, no offense, my guy. I mean, if you want to reach out in private, feel free, but I'm not going to do it in public. I like posted one picture one time from one of my Airbnbs, and somebody, because the house we bought was already furnished, right? So it was nice. Like the guy was literally just moving to Florida, and he just like wanted to, get rid of it, move to Florida, and he was like already established Airbnb, and so we knew we paid a little bit more than we should have, but it was like already buying an already doing well business. And we were splitting responsibilities. Like good way to get our feet wet, So and like I said, like it does really well, but because we probably overpaid a little bit, it's not a barn burner, and it was a great opportunity, but it's not the best opportunity of the century, right? So we took a lot of those, screenshotted those pictures, and put them on our Airbnb links because he did a good job with it. And yeah, somebody looked at it and backtracked it and posted like, this house is at this address. And I'm like, why the fuck are you going to post that on Twitter, dude? Like, what the hell? It seems to flicker when you move more. Anyway, could be the Holy Spirit. The artwork is dope. I appreciate that, man. It's kind of like a Banksy is the one. That one's a bar. The pins below are from a lot of the Apollo missions. The one over my one shoulder that's not hung up and I've yet to hung up is another Banksy canvas. And then I bought some other ones that are up and down my my staircase. Hope to hang those up. I'm lazy. They're sitting on my staircase, like up against the wall, waiting for me to hang them. I have one at the bottom. I have a lot of other pictures as well. The thing that I hung up first, I think, was this thing, my diploma. So yeah, praise Jesus, ETF. Jesus, take the wheel. I think home prices will be coming down. Eggs are $4 more. Crazy. Yeah. And I put rent money on a savings fix at 5%. There you go. Tom Lee said Friday Nvidia will fall to $90 or lower. We'll see. I was raised to be honest. Pretty sure it was a gifted membership. Oh, okay. Well, fuck me that. No, I'm just kidding. Still, I appreciate you coming. Sven from Belgium, my guy. Just because I'm an all-in guy with Rocket doesn't mean I don't glean insights and learn shit from your channel here. I appreciate that, Adam. You're the man. That's why I bought XMAR last year. Good dividend. Asia's the market to go. Company base does not mean anything. XMAR is new contracts with BP. Thoughts on SoFi or PayPal? I like SoFi. SoFi's growing. If I have some money that wins in NVIDIA, I might deploy some of that money into SoFi. Who else has changed a poopy diaper and is now bathing their toddler whilst listening to Matty Mula? It's pretty unique. Yeah, you might be alone on that one. 3 highest conviction stocks at DCA right now in order. Just curious. I mean, for me, I would say Rocket Lab being number 1. If I had less of it, I would say Dutch Bros. So let's go with Dutch Bros being number 2. Number 3 is probably just the SPY. Always just be investing in the SPY, but I think Google's almost there where I would start adding more to it. I think if it gets to the low 140s, I'm going to start slowly. And this is, I think, my problem a lot of times is when I start DCAing, I'm like, I got 20 grand, and I just like drop it. So there's that. Feeding and tolerable we're doing soon, Midwest. Oh, little poopy poop. So many strategies, so true. Knowing yourself is vital. Agreed. You could literally listen to one person and be like, he's right. And then you could listen to another, he's right. They're all right. A lot of times when people are speaking, they're right, but they're right for their own strategies, not necessarily for what's right for you. So you got to watch out for yourself. Rule number 1, don't lose money. Agreed. Love that. Great job last night on Finance Junkies. It was just a Mitts channel. But yeah, appreciate that. Always love going on a Mitts channel. It's fun. Yeah, for the poopy diaper. Nothing like a poopy diaper. Do you use Seeking Alpha Prima? Do you recommend it? I write articles for Seeking Alpha. So for those of you guys that have never read any of my Seeking Alpha articles, let me post a link to some of them. Some of them are about, why is this being weird? Where's my profile? Here we go. So most recent is about Rocket Lab. I did one on NEXT. I did one on Bitcoin recently. I'm going to write one on Palantir rather soon. And I have one in the works about Dutch Bros as well. If you invest, do this thing with money, you do not need it. Yes. Keep killing it. Thanks, ETF. You're the man. Well, I always call you ETF. You're ET. God damn it. What country do you recommend visit the first time as a passport bro? I don't know much about being a passport bro, but just going international, that's also up to you, man. One thing about travel is like you have to recognize some places are all about really roughing it, ecotourism. Some places are about, just getting lost. Some places are about being comfortable where you're at and, relaxing. So I would say if you've never been anywhere, I think Mexico is a good spot because you can do a lot of different things. You can swim, you can drink, you can siesta, relax. You can go exploring. It's relatively safe in my opinion, from my experience. I just got back, no problemos. The people are really good. They have their economy set up for tourism. So both Cabo and Cancun were great. But then there's also places like Mexico City that are really urban and it's really densely populated and it's a completely different story. So, it really depends. Some people really like that remote, like literally get lost sort of feeling. And then you might say, well, let me go do Cambodia, like that's, completely off the beaten path. So once again, it always relies. So like, I don't know. I'm, to places to visit, I would like a place that, is a little bit calmer. I like driving, so I wouldn't mind having like a car or something like that if I were to live there. The convenience of having a grocery store would be nice. Um, I like the public transportation piece. That's also kind of cool. Um, so there's that. But in terms of relaxation, or sorry, like vacation, I like to relax, drink, eat, be happy, be merry, relax, siesta, have a nice hot tub or pool or something like that. So that Mexico is really good for that. But a lot of the Caribbean was a lot of good for that. And I don't mind getting lost a little bit, but I don't really like to hike. I'm a big guy. I like to do numbers and stuff. I'd rather be like at home, but I do like to drive around and stuff like that. So I like to get lost and see different things, but I don't really like to be out in the heat and stuff like that. I'm not really the biggest fan of that. So make as many fat jokes as you want. It's just how it is. Um, so yeah, I loved getting lost in Grenada. That was a lot of fun. Saw a lot of the waterfalls, met some really cool people. They were all about like diving in the hole and stuff like the waterfall hole and stuff like that. It was really cool for me to just look at. Um, Drink. I had a couple beers by the waterfall, talking to some people, bought some hot sauce, etc. Um, and then what else? Barbados was a good time. Met with the local guy. He took me to like a local bar, which is completely different than the touristy bars. So every country has its own nuance. Someone once said to me $1,000 won't ever get you rich. That stuck with me, and I understood. Had to invest way more. Yeah, man, it's about investing thousands. Anyway, charts looking ugly. Why don't anyone look at the charts? Which data has been good in the last 2 months? It's all going to zero, man. You retired at 48. It was perfect for you. Yeah, man. Yeah, you got to do what's right for you. You got to do what's right for you. I noticed you said maybe Rocket Lab starts bringing the stock you have the highest hope for. Rocket Lab is the largest money I've ever invested money into. Individual stock, meaning. So I've invested more into the S&P, obviously. S&P is probably about 50% of my portfolio in total for stocks. Obviously, I have the other things like pensions and share-based compensation that I don't really have control of. But things that I have control of, the S&P is the biggest piece. But after that, Rocket Lab is the most. So it's the second largest position in the portfolio. Let me double check that, but I'm fairly certain it's the second largest position in the portfolio, and most money I've ever invested in a stock from a cost basis perspective. So yeah, it's 112 grand. Palantir is 136, but that's before the run up after hours. So yeah, like 19,500 shares of Rocket Lab. About it's just under 19,500 shares. That's the one I have the most conviction of at the moment. 1,000 USD is still better in the SP or Qs than a bank. Agreed over a 5-10 year period for sure. You're watching All Out tonight. They claim to make their entrance. Not sure what All Out is. Am I crazy for not knowing that? Told a young guy today that works for us to start buying every week slowly, but even as his age, if he got in the habit of putting 25 a week, and increase that amount when you can. All excuses. Agreed. That's one of the best things I ever did. I just started shuffling away money. Came close to crashing your car daily looking at your phone. Amen. Hopefully you got to stay alive. He's grown so much. Yeah, he's a good dude. Where do I think the market is heading? Volatility for the next 2 months. I can't really put my finger on it. What stock are you properly excited about right now? You just choose one. It's definitely Rocket Lab. Going for $5 January CSPs for Rocket Lab on Monday. It's a good choice. Thoughts on Disney? I had Disney for a long while, and unfortunately gave up on it rather recently. I think they'll find their footing, but they need to get over some of their holier than thou sort of techniques at the corporate level for right now. Thought about buying Palantir Friday. Bummer. Unfortunate. Thanks for all that you do. Thank you, man. I appreciate you always continuing to stop by the channel. It means a lot. Curious, anybody heard from Vitaly after being exiled for being a bully and ending the old finance junkies? I don't think it was that. I think he just had a lot going on. I think he just was always traveling. I think he got a new gig, and it seemed like he was traveling a good bit. But to be very frank, I haven't had a chat with him. I chat with Carlos earlier. I was actually going to be doing finance junkies like right now, 22 minutes in, but he called it off. He's been running ragged this week, working too much. So maybe next week if he's available. Where do I live? I live in Houston, Texas. Who do you think will be president? What will it mean for the market? I think Trump will be president. Maybe that's hopium. But I just think America's too smart. I just Kamala wasn't elected, right? I mean, she was presented as Biden's running mate, and yes, you could say, well, they voted Biden in, and therefore Kamala might be elected, but she didn't get any delegates from the DNC. Sorry, that's the wrong term. She didn't go through all the caucuses. She didn't go through. She was literally just handed the opportunity to run for president without being voted in by the people, which is not a democracy in my opinion. And I would be saying the same thing on the Republican side if they were like, you know what, Trump, you're not fit to run. Let's put in Ted Cruz. I'd be like, what the fuck? Like, what? Like, what kind of country are we living in? So I'm a big stickler for the rules. And I just don't think that she was voted in, right? She was selected as a VP, and magically now, because she was selected as a VP, has eligibility to run for president. Okay, that's fine, but go through the right presidential process that everybody else has to go to. Why is this like some sort of like what's the word I'm looking for? Like bait and switch sort of technique. It just doesn't make sense to me. So what do I think is better for the markets? I think short term, the 15% corporate tax will be good. And I think continuing the tax cuts, the Trump tax cuts will be good. I think we'll be in a world of pain. I think if those expire this year and don't get renewed for 2025 and beyond. And I don't think people recognize how good the tax cuts have been. Because it's been a while. But I also recognize that this deficit really needs to shrink. And I hope that if Trump gets elected, that Elon actually does do a good job. And in fact, I would love if Elon did it, even if Harris gets elected. But I just think for some reason, the Biden administration was never really favorable towards Elon, even though he has an agenda specific around, EV cars and making sure that those, come. So they actually have aligning principles. I think the reason being is I think Elon kind of flows on his own, and he is more of a Republican now, but I think he's always kind of been Democrat leaning in the past, especially when it comes to sort of the green agenda. He's always kind of been liberal leaning. And the thing that's interesting that I think a lot of people don't realize, and the older I get and the more, I don't want to say influence because it seems, but the more value I raise within the society, the more I start to understand a little bit how society works a little bit better. And by no means am I an expert, right? I just, have my own personal experience. And what I think I start to see more and more of is like this billionaire power struggle. So why doesn't Biden and the Harris campaign reach out to Elon, even though he's such a great, big green supporter? And I think there's probably a billionaire out there that supports Biden and Harris, and for some reason he's at odds with Elon. And so for that, when it comes to inviting all the EV car company makers to the White House, Elon doesn't get invited. And when it comes to, doing something with space, he does it. But it's like interesting because like Barack was all about seeing Elon and going to SpaceX, but at the same time, you don't really see that much from the Biden Harris campaign, which I think was pretty interesting. And I think it's just who the backers are for it. So anyway, I don't want to be too political, but there's that. You asked the question. Can I work with you? Sure, man. For sure. Where are my rentals located? Both are in New Jersey. And then eventually this house is in Houston where I work. I work in Houston here. I have a New Jersey portfolio because a lot of my friends and family live in Philadelphia, and then we would always go to the beach, and the beach is in New Jersey, so there's that reasoning. Um, and eventually, maybe I'll buy if some housing prices get cheaper here, and like Galveston in Texas, along the Gulf Coast here. Wouldn't mind buying, but eventually, me and my one buddy would love to buy in like the Florida Panhandle, like Destin area is kind of where we're hoping. But I want to buy houses. I don't really want to buy condos. Um, just because condos have a little bit more regulation associated with them. But speaking of regulation, do you worry about regulations for Airbnb? Think we're wrongly blaming them for the housing crisis? I agree. I think it's an easy scapegoat. I think housing crisis. I mean, yes, there's some piece about um, there's some piece about how do I word this appropriately? There's some piece about how housing has actually truly become more unaffordable. For salary increases, housing prices has outpaced salary increases in the recent 2 to 3 decades. So I can say, with certainty, has housing become more unaffordable? Yes. But I think the real struggle is you have a lot of luxuries that are afforded to us now that people feel like they have to spend money on that in reality, um, they probably shouldn't. Like I see people that are dirt poor, live paycheck to paycheck, and work, lower end jobs, and they eat Uber Eats and they do this and that. So like they're almost using convenience, and it's like you want to be convenient. I get it, that's cool, but you're going to pay for that. They're driving around BMWs at the same time, and it's like okay, like if you want to prioritize, like I remember when I was growing up, we lived. I probably lived like like a middle upper class, upper middle class sort of, you know, growing up. My parents weren't driving around like Beamers or like anything like that. We had Chevy trucks, Chevy, you know, SUVs, and those were still, well priced back then. I mean, expensive comparatively to say like the Beamers and stuff, but like I just see all these people living their Instagram lifestyles, having to buy $2,000, $3,000 purses and going on trips to X, Y, and Z, and they don't want to save and put the money. So they expect to be able to have all their natural upper class luxuries or upper middle class luxuries, but they don't want to do that for a home because it's hard, right? And it's like I wasn't given a house. I wasn't, the thing that I was fortunate enough to get was an education from my parents. They paid for that, which I'm extremely grateful for. Um, but what I do, like I save every dollar that I can, right? And even still, like I say that I've gotten more laxed as my portfolio has gotten bigger, but I didn't get there because I'm the Warren Buffett of investing, right? I got there more so from saving than I did from investing. And you have people that are out here like, what do you mean I have to save 10% of my income? It's like, motherfucker, like what? Like you make 80 grand a year. What do you mean you're living paycheck to paycheck? So, there's a thing to be said about people that, you know, housing is more unaffordable for sure. But then people also trying to live like downtown New York. And it's like, dude, like you can't just immediately start, right? Like you gotta live on the outskirts of town, take the train in every day, and then eventually move up in the world. Like if I wanted to here in Houston, it's like, oh, I want to live in like River Oaks and all these beautiful towns. It's like, dude, like I get it, but those neighborhoods have been established since the city began in 1850s, right? Like so it's going to be hard to move into those high class neighborhoods day one. It's like my grandfather had to paint apartments and buildings, and every house he moved into he'd have to renovate, and people are expecting beautiful things to be done. Like I'd say a good class story is like my sister did a really good job. She bought a house relatively cheap in a decent neighborhood. She put some money into it. She's made that house beautiful, put additions on, etc. And the house is done phenomenally in the markets, but she bought what she could afford at the time and she didn't complain. She just did it. So if you're looking to it, it's like you can buy a house, you can renovate it. If you have a vision, go for it. But I think people are just lazy these days, myself included, right? I'm not saying that, I'm like some holier than thou being. I'm lazy myself. and they just expect things to be done. So, the only person you can really blame is yourself. Like, I think there's just such a lack of accountability with so many people these days, myself included, that they're just like, oh, it's the market's fault. It's like it's everybody's fault but your own, but you're the one that makes the money for the family, right? Like, explain that. You know, it's interesting. I think people are such critics too. Like, they'll be like, "Oh, that company, like, I don't know." It's like, if you were a company, you wouldn't invest. Like, look at the way that you run your life. You're like, look at your life like a business, and you would be far running from that business, right? That company makes zero cash, and they don't invest any of it. And versus some other people, it's like they can be retire multimillionaires even though they're a janitor, and it's because they invest appropriately and they live below their means. um, so it's pretty interesting. But with respect to regulations on Airbnb, it is something that's fearful for me, to an extent. Luckily, I try to buy the houses at decent prices, but the thing that fears I get feared with as most is there is a piece about people buying up some of the houses in the neighborhoods that I bought up in for Airbnb as well, and they do relatively well. Like, it's a less expensive beach town compared to the neighboring town, so I think that's why people have bought there, and it's easier to rent there than it is in the neighboring beach towns that are like right next to the beach. So we're on the bay side, and the bay side has a really good sunset, so I think that that's really useful. But unfortunately, I think that because of that, it's drawn a lot of attention. So the appreciation in that area has been really good over the past several years. So I hope that it persists, but I can't necessarily say that it will. You never know. But there's been talks about limiting, but I still see it in some of the other beach towns that are a lot more unaffordable than mine. Granted, a lot more locals live in my town than maybe some of those other towns, but I would say I would expect it in other beach towns before I see my own beach town kind of hit some sort of Airbnb regulation. But I think it's also stupid because I've seen, like, my buddy's going through this right now. He bought a house, and when he was buying it, at the time, the HOA was going through a regulation that, like, every guest in the HOA had to register if they were doing a short-term rental, and that was not there before. And so it literally is like a time-consuming process that, like, has killed the Airbnb process within their community. And now everyone's selling the houses for, a loss just to get out of it, because it's like so time consuming. Nobody wants to rent in that community. They would rather rent in the community next door. So the community next door has thrived while this community has literally suffered. And so it might make good for affordability for housing, but a lot of those were vacation homes in general that people were buying. So, 5 to 10% of the population is happy, but the other, like, 90% of the owners are unhappy. So I don't know. It just goes to show you, like, if you want to live in a beach town, you got to have money. So I'm sure their parents that brought them up had a little bit of money if they want to live there and grew up there. Um, so just like me, like, I wasn't handed a house; I had to buy my own house. Um, anyway, I just think it's interesting. Plenty of cash. I don't know what to do with it. Can I please work with you? Well, I'm not a registered investment advisor, but I would say, you know, if you have plenty of cash coming in every single month, to just start investing it into some of the S&P 500. The easiest thing you can do, I would say, that I can guide you on, is, because it's not really an investment, it's just an account, is put it in a high yield savings account, something like Amex, but even something as simple as looking at Schwab and Fidelity before you make actually any investments like the S&P or anything like that. Make sure you get it out of a checking account and into a money market account where you're yielding 4 to 5%. Now, it's going to be impacted over the coming year with interest rates coming down. But if you really do have a lot of money, plenty of cash for you, that's obviously subjective to your personal opinion. But, you can get 4 to 5% versus if it's in a checking account, you're probably getting little to no interest. Hit the like. Appreciate that. Hail the Great. Much appreciated. ET FaceTime, my guy. Ha! Need to be yeah, I've done that in the past. If you find back in when I was living in Trinidad 4 years ago, I used to do live streams smoking cigars out on the balcony with the Caribbean in the background. It was fun. How much do you think oil prices are getting messed with because it's an election year? Zero. Very little. I mean, I shouldn't say zero. Very little. Personally, I've been hopping around listening to takes on oil, including yours, Matt. Like the guy said, China is a factor, but I don't see it getting all that much better there because they don't give an F about planet impacts. They have Tesla, but also BYD, and some of their EVs are much faster charges because they swap the batteries. Lots of analysts don't think WTI will be over 90 before 2028. Interesting. I agree. I think it's going to be traveling for the next at least year. I can't really forecast more than that. It's hard to predict oil prices for sure. Now, NEX, are you still buying while it's a lower price or hold up a DC court? Yes, I am. I just put some shares the other day. Matt, I think you have no joke. My exact same sense of humor, man. You kill me all the time. I appreciate that. I try to be sarcastic. I try to be. Any stocks you're interested in but not invested in? There's one that I'm doing due diligence on right now called Blend Labs, BLND, and I'm thinking it's an interesting play because they're about like title companies and they're trying to offer more. Dude, can I just toot my own horn real quick? Let me just toot my own real quick. I did a little beard trim lately. Like I didn't really trim the beard per se, but I lined it up. Like I had like a neck beard going a little bit last night and stuff. And right before I got on stream with Hot Vince, I trimmed it up. The lines look good. Anyway, back to this normal broadcast here. Blend Labs, yeah, I think it's a Peter Thiel investment. So you congratulate them. I did some research. They do title companies and stuff. They're not exactly profitable as of yet, but they're getting closer. And my thought process with the increase of activity year over year, they should potentially see a little bit more money. So I'm looking at this one. We'll see. Matt and Steve are both good reads on Seeking Alpha. I appreciate that. I really do. I'm trying to get better at it. Steve's an absolute animal. Travel with the dollar is strong. There's not much anti-American sentiment like recently Barcelona news. I don't know much about that. I don't know about Barcelona news. You'll have to give me some insights. What are your thoughts about Coinbase? I don't hate it. I think that personally crypto will do well in the next 9 months. I think a lot of people are really negative about crypto for the time being. But I'm an okay fan. I think it's a little bit pricey. I was thinking about making this investment back in late 2023, and I never did. So I never really followed up on it, but I'm not sure of the valuation right now. So I don't hate the company per se, but I don't know how cheap it is on that. Dominican Republic is always a good time. I've only been the once. I would suggest not bringing children. That's a little bit more dangerous from my perspective, but overall relatively safe. Junebug just saw this. June, you're in trouble with me because you just saw this. No, I'm just kidding. I don't ever really go live on the personal channel, so understandable. You probably don't even follow me, June. Just kidding. You're a moderator. North Europe, Sweden, Norway, Finland. Yeah, I've been. I might actually visit up with Vince's Bullish at some point. Yeah, I agree. Rocket Lab's a winning ticket. Rocket Lab's also your biggest. That's awesome. Modbox, what's going on? Welcome. We got Adam doing the good old rocket symbol. Everybody loves Miss Junebug. 12K in Rocket Lab. That's insane. Sold Disney. Yeah, that's one interesting one. What are some key things you look to when evaluating stock? It's a good question. Whether or not it's eventually going to be profitable, whether it's growing, whether I think it's going to have a moat, whether I think it's the best in class. Yeah. As a Democrat, I feel cheated of choice. As a California resident, I'm voting for RFK as a protest vote. There you go. Yeah, I'm all for having a great election, but I just feel like if any, even if I was a Democrat, I would feel exactly like Junebug feels right here, like completely stolen of a opportunity to vote somebody in through a normal election process. And I can understand if there's an incumbent, but like, and that people are like, oh, but she's kind of an incumbent because she's vice president right now. It's like, but people are voting for the president. Yes, the vice president helps, but the majority of the time they're voting for the president. So when they voted for Biden. They didn't vote for Harris. Harris was on the ticket. But I guarantee people are like, well, Biden's going to die in office, so Harris is going to take over. Like, I doubt that was on people's minds, maybe as a portion of people's minds. And I try to stay apolitical on my channel. I don't like to really talk and lean politics and stuff of the like, but I don't think I'm saying anything bad here. Like, I think the Democrats were robbed of people having a normal Democratic, choice. And I don't mean like the Democratic Party. I think like normal American political, like, policy choice. Like, this is how American politics works. And unfortunately, they like completely bypassed the system that we've had in place for 200 some years. It's complete bullshit, in my opinion. I think she technically won the nomination at the convention, but she got the majority of the delegates. Yeah. Which is technically constitutional, agreed. But the delegates can be Gumby if they wanted to be. Yeah, like, but the problem is like there was no other real contender at that point. You know what I mean? So like, while she got the delegates, she didn't go through a caucus process like the Iowa caucus and place where they can be weeded out, right? And when she did go through that process back before Biden was the presidential nominee for 2020, she dropped out. She was like one of the first candidates to drop out because of her, where she stood in terms of the standings. I think she dropped out like with like 1 to 2% of the votes or something like that. Obviously, she was running against Biden, so Biden was the majority holder of a lot of those caucus votes. But it just goes to show you, like, there was other people to drop out way later in the race. And maybe people's opinions have changed of her because right back then she wasn't necessarily, she was more so a California sort of political leader rather than like a global stage, presidential political leader or presidential candidate. But to me, it's just, I would say the same thing if Trump did the same thing. Like, if he didn't go through, like, for example, say, Trump, I think it's an interesting situation because he didn't go to the debates and stuff of the like, but he still was able to participate, even though they tried to not let him participate on a lot of the caucuses where he won, and he went against a bunch of different people. But imagine now that they did it and Trump were assassinated and they just magically made JD Vance the nominee. I would be like, what the hell? Like, I would honestly be like flabbergasted. I wouldn't know what to do. I would be like, well, I would probably like, I don't know. I don't want to say revolt, but I'd be like, what the absolute shit, right? Like, I didn't nominate this person. Like, it was a, running mate for Trump. And I think it's a fine running mate, but like, but I guess it's, it's interesting. At that point, I think if it was a choice, I would probably vote for RFK. I'm with you. Like, definitely not voting for Harris because of the way that she got it. I also don't agree with her policies. But if they pulled the same thing, like where Trump were to pull out of the race and because it was mentally unfit or he was willing to spend time with family, go back to his normal business life, and they were just like, yep, JD Vance, the presidential candidate, I'd be like, what? And I would probably just vote for RFK. It's interesting. I'm just not a fan of how they're doing it. I would much rather see a normal process, right? I'm not hating against her because she's just a Democrat. I'm hating against it because of how she got the nomination. Dumb question. More research could be answered, but maybe you can answer. I thought some launches were manned, but sounds like none are or any carried crew for Rocket Lab now. They've thought about the upcoming rocket Neutron is capable of human space flight, but they have nothing at this point planned for it. Biden ignores Elon because Tesla took off, and Biden supports unions. Very good. HOA expenses associated with condos. How do I contact you? Wouldn't let me message you because I'm not verified. Oh, on X. You try emailing me. I don't have like a non. I guess everybody has my email anyway. Yeah, just email me here. Email me there. Did you see TJ's $12 cover calls? Is it even worth the roll at that point, or what would you do? I'm not the expert there. TJ is. I got caught with my hand in the cookie jar in the mid 20s, and I've been rolling, and I've been able to get myself pretty close to out of it. I have some 30 and a halves right now for next week that I'm planning on rolling, and they didn't get called away this week, which was nice because they're for the 13th. So we'll see what ends up happening with those, but I anticipate I'll be able to get out of them just fine. I've been able to roll for the past few weeks and get close to being out of it. So a lot of people don't have delayed gratification. I could agree with that. Callie visiting your nephew's pancakes for 4 people was $150. No Bloody Marys or mimosas. Well, I don't know what's a crime, the $150 or the no Bloody Marys or mimosas. No offense, Matt. It sure looks like it needs a wash. Don't worry, though. It is the same issue at times. Yes, this has been on the floor many a times. This does need a wash. It's like the 3rd time I'm wearing it. You're not wrong there. And it's also got like dandruff on it. So much appreciated for noticing. I have yet to do laundry since I've been back from Cancun on Tuesday. So I meant to do laundry earlier, and then I just never got to it. We're about at do some decent live streams on the Cashflow Chronicles channel. So for those of you guys that have yet to subscribe over there, I would appreciate if you guys did take that opportunity. We do a lot over there. We try to go live twice a week. So let me put that in. And no offense taken, by the way. The shirt looks like shit. I'm not going to lie to you. I'm not trying to hide that. So if you guys haven't liked the Cashflow Chronicles channel, let me post that link here, and you can reach out to me there. For Airbnb, you should watch out local regulations, country, community. That's why I lease. Oh, lease your Airbnb is smart. Smart. Looking at Dell, which their earnings were September and the elections. I'm thinking I could fall to 85 area. Don't matter about the S&P because the S&P is going to lower. It's just any stock going to hurt them in the short term. I don't know much about Dell. I've had Dell computers in the past, but yeah. People like to show money. I hate spending money for stupid things, except your wife. You always got to spend on the missus, man. Yeah, appreciate that. Selling options, you selling puts. What do you have on right now? Let's go through. So I have covered calls on a lot of things. So let's go through the covered call list first. Just make sure I'm not sharing my screen. I think we're good. Okay. So I have covered calls on the following. I have covered calls on my Amazon, my Alibaba shares, I have BitO, which is a Bitcoin ETF, which I don't recommend because it's futures, not the actual underlying. I found that out the hard way, so don't invest in that. It's like a $10,000 mistake. But I write cover calls on that. I have cover calls on my Dutch Bros. I have cover calls on my Google. I have cover calls on my Palantir. I currently have no covered calls on my Rocket Lab in my brokerage account. SoFi I have covered calls. S&P 500 I have covered calls. Stag Industrial I have. Oh, they're out of the money again. Okay. I thought I had in the money covered calls on that. I was waiting for that to potentially get called away, take that money, invest in the S&P, but it's like 27 grand. So it'd been nice to move that to the S&P, but and then I have TQQQ covered calls, which they're up like 75%, which makes me sad because TQQQ is no bueno right now. It's down to 55 bones. So what else do I have covered calls? And my IRA, I have Rocket Lab covered calls, SLG covered calls, and TQQQ covered calls. And then in my traditional IRA, I have SOXL covered calls, which is up 95%. But SOXL is down massively. For puts, sold puts, I have Dutch Bros. I have a $29 put on Bros. I have a $50 put, 4 contracts on Celsius because I was thinking below $50 is a decent place to start accumulating a position. And so my cost basis on that, did I roll that? Yeah, okay. So I think my cost basis, if I were to get put those, is probably like 45, which I'm okay with. So I'm just going to keep rolling it until they eventually get put to me. I have a one CrowdStrike put at 275. And I'll just keep rolling that. I have one IWM put. So I'm just going to keep rolling that. It's at 210, so it's not a big one. I have 5 MicroStrategy $85 puts. So I'm just continue to roll that. I have some Rocket Lab puts, 50 contracts at $5. So that's for January 2025. So that's up about 25%. My thought process is like if it stays below 5, I'm going to accumulate shares. So I have some SoFi $7 puts. So I was like, what would I do with $5,000? And I said I would probably buy SoFi. So I put $7 puts, which is $4,900. And for that, I got 84 cents. So I'm trying to think if that was the original contract, because if it was a damn good contract. Or if I rolled it. I think I might have wrote it for like October, and then I was like, let me roll it for January. But either way, I mean, the cost basis on it is low $6. So there's that. And that's the only puts that I have left. So those are the put volumes for me. Iceman, what's going on? Let's see. What's going on with the next stock? I wrote an article about that, so find that on Seeking Alpha. If you're curious about that, let me post that in the chat. What do you do with the spanner side beside your name? I have some money, thinking of putting it into either SPY, real estate in Cyprus, or Spring. Which do you think will be higher after 20 or so years if you had to guess? That's a good question. I mean, I don't think real estate's a bad thing. I think it also is completely different. SPY is passive. The real estate piece you're going to have to keep on top of. I think if you were to stay on top of it, the real estate, if you were up to it, even though it might be a little bit more labor, would probably be the better investment long term, 20 years. And the reason being is I think the leverage of that, and And what I mean by that is if you do it right. So I don't mean just like buy one home and just let it appreciate. I would mean every 4 to 5 years, it might entail a refinance or a HELOC, taking some of that money and buying another property with it. And I think that that's where the real wealth in real estate can be created. The problem is then you can end up with a lot of homes. So that's a good or bad thing. Good in terms of if the market's going well, bad if the market turns over. So I would just think about it. Can you get the rental people, right? Are you in the right demographic for it? Like, if you're trying to buy like a $550,000 home, might be tough. But if you're able to find a couple $100,000 home and rent it, might be a little bit easier. For not only the fact that you have to like maybe a $2,000 mortgage payment or something like that, versus like a $4,000 mortgage payment with a $550,000 home, but also, you'd have to play the game of like, what's the right loan to value ratio? Do you kind of want to hang out at 65%? So have like 35% equity, 65%, kind of loan. And that's where eventually I want to get my larger portfolio. Once it's large enough, I want to stay at like 65%. So that way I could buy homes at like 20% down, let them appreciate. And once they do, I can, roll them into a portfolio loan. Hopefully, eventually, it's kind of the hope that I get to roll everything into a portfolio loan, pay one mortgage, pay one, monthly note. And then if the asset value of all those things is however many millions of dollars, and I only owe, half of that, then I could take a portfolio loan and say, okay, I can take 15% equity out, buy a couple houses, refinance some of these houses, refurbish some of these houses, do X, Y, Z, and look. Or I could just be like, I'm done, sell all the houses. Let me get whatever value is here, and let me just put it in the S&P where it's more passive. You can have that optionality. Sorry, I'm answering this question. But yeah, I mean, it really just depends, I think S&P will be great, but I think you'll probably get the standard double every 7 to 10 years. I think it's going to be very rare if you double the S&P every 3. And I think right now we're going to probably either see a flattening or a pullback. So I think if you were to talk right now, I think I would go with real estate personally, especially as mortgage rates come down. But that's on the caveat of you're going to continue to leverage the money. So if you're just going to buy a house once, right, one rental property and only one rental property, then I would go with the S&P. So if you're like, oh, in 20 years, I want to have the house paid off and it's the only house, then I would say S&P. But the reason why I did the other houses is like eventually in a couple years time, I hope to get a HELOC. So when I'm talking about refinancing the first house that we bought in 2022, it's appreciated over 100 grand. So now we have about 100 or so thousand that is it more? No, it's like 150,000 that we have in terms of equity, and the house is worth about 500 some. So we have like 20 something percent equity in it. And so my thought process is like, do we take out the 30, 40 grand and reinvest that somewhere else? And it's like, well, it's enough to be like, if we have money on the side to invest elsewhere, but it's not enough to do it. So, I mean, if we did it in 2026, it might be a different story, but I'm hoping to do it next year. But I guess it's all about timing, because I want to buy I want to buy with this partnership. I want to buy a second house in that partnership, but nobody else wants to at the moment. So they want to wait another 2 or so years, hopefully until 26. But I want to buy another house. Like I want to buy a house. Like I bought a house in 2022, bought a house in 23, bought one in 24. I would like to buy one in 25. I would like to buy a house every year for the next couple of years. And then I feel like if that's the case, then every year or so, every couple of years at least, I'll be able to refinance one of them or several of them and get money out and then make another investment. And that's the thing, is like, it is like, say for the first house, we put in 50 some thousand. we'll be able to pull out 30, 40 grand from it and still have a lower down payment because we'll be able to refinance it at a lower rate. So we'll still be able to cash flow if that's the case and be able to potentially buy another house at a discount if you think about it that way, because we'll have almost half the down payment for another house. Because we were able to refinance 30, 40 grand out. So it's like the return on that ends up being really, really good. So if you continue to kind of go down that path versus if we were to just sit there and be like, okay, we're not going to pull any money out. We're going to refinance, keep all the money in there, the 150 grand. It's like your 150 grand's great, but you could use 50 grand of that to leverage up with another house and get double the appreciation. So if the house that we have goes to 550,000, yes, now we have 200 grand in equity. The house is worth 550 grand. But what's more likely is if we were to say, take that 50 grand that we had in equity, leave ourselves with 100 grand in equity in that first house, buy a second house with, let's say 50 grand out of pocket, 50 grand from the refinance. Now we have two homes that are appreciating and likely going to go to 550 or 600 grand. And now you're getting double the appreciation versus the one. And the appreciation is the place where you're going to make the most wealth over the long term because you're able to leverage. People are like, oh, but you only go up 2 to 4% a year in real estate. It's like, yes. But if you kind of keep yourself in that loan to value ratio range of 65%, you're leveraging 3 to 1. So if it goes up 2%, really it went up 6% on your cash or like your equity because you went up 2% for the house value, but your leverage 3 to 1. You only own 1/3 of it. So your cash is kind of going up 6% while the actual value only went up 2%. And same thing if you were to go up 4%, right? Might have gone up 4% on the home's value, but because you only have X amount of money in the home, $100,000 in the home, let's say, and it went up 4%, it's a $500,000 home. Well, you just made 20 grand off of a $100,000 investment. You went up, 5x comparatively to that 4%. So had you owned 100% of that house, 500 grand, and it went up 4%, you would have made 20 grand, but that 20 grand was off of $500,000 of your own cash. So that's the beauty of real estate is like you can have other people pay down the mortgage. You can leverage, but leverage rel. But the problem is you have to think housing prices do drop. So that's why 65% loan to value is favorable over a 90%. 90%, you can think about it, you can leverage 10 to 1. That's phenomenal when things are going great, but things always don't go great. So that's the fear of that piece. And so for me, I'm trying to get to a place where my personal residence is at 20%. Not really because I really am that scared, but because I'm trying to get the monthly payment down to a place where it's reasonable for me to try to rent it out. And I think I can rent this thing out for like 2,200, 2,300 if things go well. So yeah, I'm trying to get my mortgage payment below that with taxes and everything like that. But the houses that we have right now, I mean, they print money. So I would for New Jersey. I mean, I would love to be able to pull money out of those and invest into a third or fourth or fifth house. But the partnerships are different. One's with my sister, one's with one of my best friends. So yeah, I look fresh. Nah, this is like unwashed hair. Hair looking good. Oh, I appreciate that. This is bedhead. That icon. Oh, a wrench. This banner. I don't know what that is. Heinzie, what's going on, my guy? Heinzie Pulls. Matt made me a moderator. Yeah, I should make some more people moderators. How do I get over there? Get me over there. I might end it up here. I might go get a coffee so I can finish writing this article. Let's be honest, I'm not finishing shit. I'm be lazy. Where do I get to it? There we go. View. Yeah, Heinzie's a guy. Where we got? Where's there he is. Make my guy. There he is. Um, where was I? I think I'm almost getting down to the end here. Market should test August 5th laws easy. Yeah, you said that earlier. So Heinze, the man, I want to be a mod. Adam wants to be a mod, sure. As long as you don't destroy anything. Bitcoin miners are looking tempting. I'm not a fan of the miners. I'd rather just own. Like, I like MicroStrategy because it doesn't have to go with mining. Royal Cruise. Packed. Huh. Interesting. Depends, man. Value investing can mean different things to different people. To me, I'm investing in valuable companies. They probably would be more so considered growth. Bought JOB and PED, which both debt free, and then went all in on cash because I watched the Bloomberg event. Interesting. If you're an investor, you vote Trump. I think Bitcoin is going to 50,000, which is bad for miners. 48 for Bitcoin or 35,000. Interesting. Sex changes for children. Interesting. I agree. Can't vote in the US, but you hope it'll be Trump. I've actually heard this. A lot of Europeans are actually voting for Trump, which I thought was interesting from what I've heard. But I think it depends on the country. Like, I know Italy, and I feel like the northern European countries are very much for Trump, but I've heard like the UK, obviously, I think is more so for Harris. The Democrats in office didn't want RFK on the ticket. Yeah. Have you ever looked at ARE, the REIT? I have not. Is that Ares Realty? What's funny is EVs or oil, it will look bullish if Trump is elected. EVs will do good, I think. Yeah, EVs do good. I would consider moving the fuck out of the US. Jesus. Goodbye to our freedoms. Melanie, what's going on, my guy? Republicans have a strong bench. Vivek, Marco, Nikki, Tulsi, Bruce Wayne, Newsom. That's funny. The Democrats' worst scenario was RFK and Tulsi endorsing Trump. Yes, I agree. Yes, please hit the like button. Much appreciated. Share this with friends and family. If you learn something from the channel, please share with friends and family. Let's go to this Airbnb. I agree. Yeah, if anybody wants to rent the Airbnb, they're in New Jersey, reach out to me. I'll be more than happy to give you a good rate. Off market, but if you what's the word I'm looking for? If you're from Airbnb, I only use Airbnb. I don't do off market rentals. Wink. Willie, what's going on? Good job. Oh, Heinze. Yeah, Heinze does a good job. Heinze does a good job. It's got that hog. Rocket Lab, agreed, Melanie, where it's going to the moon. Do you brush your teeth with the water bottle still, or you visited? Oh, no, I just use regular tap water. And for some reason, my stomach was better when I was in Mexico compared to here. I don't know if I'm eating too much hot sauce here in the States or what. But yeah, believe it or not, maybe I've just come accustomed since I lived in Trinidad to the different water. Good covered calls. Yeah. Am I big in Baba? I'm sitting on 200 or so shares, I think. So down. What's your Palantir strike price? 30.5. So underwater technically. It was actually in a good place where I was hoping to be able to roll off for next week, but I'll have to roll it one more time. Adam, have a good night, my guy. Thank you for hanging out for so long. If you are big in Baba, why? Honestly, man, I'm a firm believer that I think it's a great company. It's got great cloud presence. I think the cloud presence is going to continue to grow in China, personally. But obviously, it's a variable interest entity, and so with variable interest entities, you always have issues. So, greetings and salutations. What's up, my guy? Hopefully you're doing well. What do you think of Oxy making a new low on Friday and Buffett bought at 56 area and wonder how low this will go? I think oil is a lot further to go down, personally. I sold a lot of my Shell. Shell was one of my larger positions for a while. I think it was my third largest position. It's gone. So I'm sitting in some cash right now with that. And I saved myself some money. How much have I saved? Let me see. Let's say it's $67. So I sold at $72.50 minus 67 times 880 shares, I think it was. So I saved myself $5,000. Right now, I would love to buy back. I would love to buy back all my shares. Maybe I would love to actually, what I would love to do is I would love to buy back my Shell. And to be honest, I might go if I forget how much the investment was. I think it was around 60. Maybe it was 50. I don't remember. But I would love to buy back however much I sold that Shell for. I would love to buy back if oil goes to the $50 range. And I'd probably split it between Shell and Total. Total, I think, is a phenomenal thing, especially if you're looking 20 years down the road. Total absolutely kills it. Their renewable portfolio is doing really well. I think that in 10 years' time, they're going to be one of the biggest renewables companies in the world. And I don't think right now they're getting enough credit for it. So, make you a mod? Maybe. I do not write. I don't have micro strategies in the portfolio. I just have puts. So if it were to go down enough, I'm bullish on Bitcoin. So if it were to go down enough, I would buy some. September 4th, one company value investors might notice that Pedevco is supporting his Zax rating a number one strong buy as an A grade. I don't know what they do. So enjoyed your stream with Amit. Thoughts on ASTS? Thank you. I love going on Amit's channel. It's always fun. I'm glad that you're here and subscribed. I don't know if I've seen you before, so welcome to the channel if it's your first time. Thoughts on ASTS? Hey, man, I think ASTS are doing a great job. I think they might be their forward valuation, I think, is very rich, but I think it could be warranted in 5-10 years' time. So I think that in that respect, good for them. I value the fact that they just did a equity raise at the market. I think that was really wise of them. But I think it's a little bit too early for them. And hopefully they cool off a little bit. I think what people are excited about is a true competitor to Starlink. And they have some big names, obviously Verizon, AT&T come to mind. So it is what it is. Like Kramer been saying, to buy companies with a PE and profits and companies with no profits will get hurt much faster. Agreed, they do. And I agree most of the time. The thing that Kramer does, though, is he's a swing trader, right? So you have to recognize, generally, he buys in cycles. So he looks very cyclically, depending on where the market cycle is. So he buys when it's low, sells when it's high, waits until... and that's not a bad thing either, but you have to have the eye for it, and you also have to have the time. And I think a lot of people, unfortunately, don't have the time. Why didn't you buy rentals in Houston? The prices gone up in Houston. Are you expecting prices to go up with interest rates coming down? I've got a property in Cade Morning at Spring, so you're doing good. Good work. No reason why I haven't bought more rentals in Houston. For a longest time, I thought I was going to go more international for the company I work for. And so with that, I was afraid to buy houses and not really be living here. In retrospect, I kind of wish I had bought a house before I left, because then I would have had somebody rent it out likely. And then I would have probably came back, bought a different house. I would have two houses here, and then I would potentially be on the verge of buying another. So I'm probably about a year out from potentially buying another house within Houston and then renting this place out. It all depends on the refinance and everything with that. I'm not going to buy a house before I get this place refinanced. So, and would probably need, just because I bought another house in May, I probably need until May of next year to show that the rental income from the house that we bought in 24 with the tax return covers the mortgage. So that way it doesn't get counted against me. Otherwise, it might be like you're carrying too many mortgages, right? So that's always the fear as well. So buying a house every year kind of helps in that respect. Um, what else was I going to say? I mean, I don't have any problem with buying in Houston. I think if I were to continue to buy in Houston, I would want to start at like a 25%, 30% down payment, if it makes sense. Now, if it cash flows and I only have to put down 10%, maybe I would do that. But and if it's a personal residence, I'm probably only going to put down 10% either way anyway. So like my next house, it's probably going to be a step up in price. It's probably only going to be 10% down. So um I don't know. I think a 60 to 70% loan to value ratio is where I'd like to be. Um for some reason I was just fearful of buying real estate. I think it was the never having the experience of it. Um and also at the time I just liked the liquidity of stocks. Then I started to realize I also didn't like debt. And I was kind of fearful of debt. And then I realized like there's big differences between good debt and bad debt, and learning to leverage, but leverage the right way rather than leverage at all costs, because the banks will always give you more, and then they'll just say, "Well, you still owe us." So to me, it's about understanding and keeping yourself disciplined with debt, and that's something I've realized. Because the banks will let you just continue to borrow. Like, for example, I have friends that have houses that are 3 times what I live in right now in terms of value. And I'm like, how? How, my guy? So anyway. Install a water filter under your sink for like $500. One of the best investments of your life. I've thought about doing this as well. Look at Umicore in perspect to EV recycling 4 segments. Interesting. Well, I appreciate the 60 to 70% of you, not 60 to 70%, 60 to 70 people hanging out for quite some time. Didn't see anybody come through on Twitch, unfortunately. So hopefully in the future we can get some more people on Twitch over time. We can build that up. But definitely a lot of folks that came through on X, a lot of people that came through on YouTube. For those of you watching that never chimed in, please be sure to hit the like button, of course, but also subscribe so you can participate in the chat. It's completely free. Contemplate. Am I going to Vegas? I haven't made it up yet. Yeah, I haven't made it up. Made up my mind whether or not I'm going. I have to go to UDEC. Yeah, undisclosed European country at the end of September. And then once I get back, I have to renew my passport. So I'm still wavering whether or not I am, or if in November I'm going to take another trip somewhere if I get my passport back. So appreciate you guys. You guys rock. Appreciate you staying with me. Yeah, 60 to 70% is where eventually I want to get to. And I think that's perfect, because if the market declines by 10, 15, 20% for your real estate, you're probably okay. And that means you also have probably a lot of leeway on your loans as well. And your your rents can come down a little bit. And you won't be like hard pressed. But if you are at a 90% loan to value, it also depends on how many homes you have. But if you're at 90% and you have a lot of homes, especially if you get a portfolio loan, then which eventually I want to get to, is like a portfolio loan where you have like 10 plus properties all in one loan. It's going to be hard to do with 90%. I don't even know if they'd let you. They'd probably only let you do it at 80%. So I'd probably stick at the 60 to 70% at times. So that way, if I see a good deal and I have a portfolio loan, I could easily pull out 5 to 10% for down payments from the loan, and use that to buy another house. And I wouldn't be super strained, right? I would only get up to like 75% loan to value ratio, and then slowly be able to build that up over time. And the nice thing about the portfolio loan as well is like you're doing it as a whole portfolio of assets. And so if you wanted to get rid of one, you have that opportunity, and not necessarily like you can kind of pit them all against each other. Like you have everything all kind of appraised and they kind of know what your portfolio looks like. And so they could be like, oh yeah, it's worth it. Like, and also, it just makes it run more like a business. Like if you just have one big account or one big mortgage that you always have to pay, one note. Like right now, it kind of sucks. I have 3 different mortgages that I have to pay. And that's not a big deal, but it's another thing where it's something you have to keep track of, versus if you have a portfolio loan and all of them are tied into each other, then it makes it easier because then you're paying all 10 mortgages at once. So eventually I'd hope to get to that point. And also I'm sure that if a bank got like $50 million in and I had a portfolio loan, they'd be like, oh, we can give $1 million or $2 million to Matt and he'll figure out a way to use it. And I'd be like, yeah, sure. I'll figure out a way. So, yeah, I'm not 100%. I mean, I'm like 80% certain I'm coming to Vegas. So yeah, I'm trying to figure out who else is coming. I'm trying to convince some other folks, try convincing Steve and a few others to potentially come to Vegas. I would love to come, but it also has to make a lot of sense for me to go, from a business perspective. Sven, thank you. Keep doing it. Make more advertising for your channel when you're on other channels. I try, man. Try to get people to follow, but I can't beg. I don't want to be that guy that's like begging people to follow, but I try my best. I do try my best. But you guys rock. I could go for another couple hours, but in reality, I probably should go and do some other things like this package. I have to open this package. I got some new loafers. Might put those on, go for a drive because they're driving loafers, see what they feel like. Beg me. I'll follow you. And Sarah, if you're ever interested, reach out. Curious to pick your brain about your houses in Kingswood and stuff like that. Because I'd like to buy more in the area, and it seems like you are a little bit ahead of me. I should be listening to you. So if you have Twitter or anything like that, hit me up. And I don't know if I'm going to have dinner. I had I went to Pluckers. So for us Houston folks, I got 10 wings and a salad. And that Cobb salad, dude, I got like a buffalo chicken Cobb salad. My guy, if you ever looking for like a good meal, that buffalo chicken Cobb salad was really good. And the dressing that it came with, I think it was some sort of ranch. So yeah, it was really good. Aaron, unfortunately, my friend, I'm about to end this. Much appreciated that you're stopping by. Really do appreciate that. But I do have one request for all of you guys. So I would like to say thank you for the 60 folks that have been very persistently watching over the past 2 hours, actually. Do me one big solid favor. So I've gotten a few subscribers from this. For those of you that haven't subscribed and are watching of that 60, please do so. The last thing I ask of you is if you learned something, you really enjoyed sitting here, the conversation in the chat, the conversation that I was bringing, the answers that I may have given, the truthfulness, the honesty, my thought process, try not to hold me against some of the things that I said politically. But if you truly enjoyed it, please share with one friend or a family member and get them to subscribe, and try to grow this community. Try to get your friends, family to continue to do well. That's all I can hope for. That's why I do this. Um, I barely make any money from these streams. I mostly do it out of the kindness of my heart, and eventually would love to do this more full time. So please share with friends and family. That's what's mostly this is all about: friends, family, and making sure that we all prosper. So thank you guys, and hope to see you guys soon. I'll try to make a valiant effort to do more solo streams because this was a good time. I've always had a good time doing the solo streams. So you guys rock, and always appreciate the continued support. Until next time.